All right, we all know the U.S. is heading into primaries in South Carolina, and we saw another Republican debate just last night. Lots of talk about taxes and the economy, but only one candidate is saying this.
The fact that we are the issuer of the reserve currency of the world is a real temporary blessing for us because it's easy for us to export our money. That's unfortunately our greatest export, and they're still taking our money. Soon, though, they're going to quit, and this whole ball game is going to end, and we better get prepared for it.
An important issue by any measure, at least by ours, for a country $15 trillion in debt. But when it comes to Ron Paul's economic policies, let's just say the mainstream reception is not exactly warm. I'll give you an example. Pay attention to CNN anchor Erin Burnett when she responds to Bill Gross about Ron Paul.
But he does know how the monetary system works, and that's something I think that Romney and Santorum and others don't have much of a clue on.
Well, I mean, but this is interesting because I know you're saying, all right, he goes too far. But, you know, a lot of the people on the strike team, it's not going to surprise you, Bill. They said, yeah, Ron Paul, he's crazy because he wants to get rid of the Fed, and I just dismissed that out of hand.
He's crazy, dismiss that. But we ask, how can you understand the globe's economic problems without understanding issues of debt, fiat currency, the impact of Federal Reserve policies, sound money? That's what we don't get. And what path is the monetary system and the economy really on? You got to look at those things. So here to help us do that, founder of goldsilver.com and author of this book, Rich Dad's Advisors, Guide to Investing in Gold and Silver, Protect Your Financial Future, Michael Maloney is here with us. Thank you so much for being on the show. It's great to have you in studio. As I was telling you, your book really opened my eyes a decade ago to just reality, I guess.
Oh, well, thanks for having me. Yeah, you know, one of the biggest problems we have is most people don't understand how the monetary system works and how debt-based currency robs all of us and transfers wealth to the banking sector.
Well, we are really going to get into that. But first, I want to ask you this, because just playing that clip and watching the debate last night and following all of this, especially being in Washington, the conventional wisdom from Wall Street to wonks in Washington seems to be that Ron Paul's economic policies are loony, they're crazy. But my question to you, how can you look at the economy without talking about things like debt, fiat money, sound currency, all those issues he raises?
Well, you can't. I mean, you said conventional wisdom, and actually it's conventional ignorance that all of these people are promoting. If you look at monetary history and you look at what has proven to work and what is proven not to work, a debt-based currency system eventually fails. Sound money always ends up winning. So it is, the status quo is conventional ignorance, and there's only one person out there that I see that actually really knows anything about it that's running for office, and that is Ron Paul. Well,
that's what's so baffling to me, because being in Washington too, you have everybody from policymakers to wonks to bloggers to PhD students. I mean, everyone that is pro-Keynesian, they are pro-money printing. Maybe not, maybe they're critical, but they're not really looking at the Fed. As you've just said, they have conventional, that's ignorance when it comes to somebody like Ron Paul, which they dismiss as fringe. But your view and the things he talks about, ironically, whenever I talk to investors, people that are independently making money, have skin in the game, have been successful, and are really kind of doing it for real, they all talk about the things that you're talking about and that Ron Paul's talking about. Why do you think that is?
Well, it's the only thing that works. You know, history proves that these things work, that sound money works. History proves that fiat currency eventually doesn't work. The system always implodes. It's a debt-based currency system where we're borrowing currency into existence and promising to pay it back plus interest. The dollars required to pay the interest don't exist yet. So we have to work in the future. We always have to go deeper in debt every year than we were the previous year as a society for the whole system to continue functioning. And when we save up and we pay down debt, we extinguish those dollars that we borrowed into existence. This is a credit-based monetary system. So if we have to stay ahead of it, or the whole thing starts to implode by going deeper in debt. That's the reason we're $15 trillion in debt now, and we were only, I can't remember what we were when Obama took office, 11 or 12 trillion dollars. We have to go deeper in debt, or the whole thing implodes. And it's basically a form of enslavement. It's a feudal system, all because except the lords are no longer these people living in castles in England. They're the people living that work in the banking sector. If you look at all the big buildings throughout the world, it's the banks. And we have to, when we borrow currency into existence by the Federal Reserve, writing a check and buying a bond, that bond is promising to pay back principal plus interest, and that interest, that principal and interest, comes from our tax dollars. So we have to work in the future to pay taxes for the dollars that exist today, that we're spending today.
Are you saying we're all becoming serfs?
Yes.
Okay.
That's exactly what I'm saying.
And you know what? That's something that is very au courant right now, right? Okay, inequality is what everybody is talking about, or at least it's kind of what Occupy Wall Street has really embodied, is this concern about inequality. It's kind of moved it into the conversation. But yet, the solutions or the problems people are talking about are all things within the system. How come nobody's talking about the monetary system as the problem, if that's what's creating this massive transfer of wealth?
It does. It is one of the things that creates this huge inequality. And I went to Occupy Wall Street and I interviewed a number of people, and one of the things I noticed was that they're all protesting a bunch of different things, and they don't realize that all the different things that they're protesting have one root cause, and that is this debt-based currency system that creates these huge discrepancies of wealth. You know, I know that in the short term we have these big economic booms because of this currency system where we borrow currency into existence and we go on a credit binge and there's a boom, it goes into a bubble, but then the bubble collapses. Under a hard money system you have slower growth, but it's continuous growth. I have a feeling that our level of prosperity today would be far, far higher under a hard money system that is fair than it is under this fiat currency system. But the fiat currency system, the people that are in power, if they have the power of currency creation, they get to direct the spending. So it limits our freedom. When you have a hard money currency system, the government can't do as much deficit spending. The government has to be smaller. If they borrow too much, they slow down the economy because they're borrowing currency out of the private sector. So what drives the economy is the people and the freedom to vote with your wallet, vote what you want to spend. So the economy gets skewed the way the free market wants it to go, the way that people want it to go.
Well, that's an interesting point. So, okay, let's get into some of these things, because you're talking about how money is created. And I want to break that down for our viewers, because money isn't exactly printed. It's loaned into existence, and that ties into the debt problems that we have. Can you explain how it works a little bit?
Well, there's basically two forms of debt-based currency. Base money, which is created by the Federal Reserve whenever they write a check and they buy something. And they usually end up buying, through open market operations, U.S. Treasury bonds. The population of the United States has to work in the future to pay off those U.S. Treasury bonds. We have to pay taxes in the future. So every time the Federal Reserve writes a check, it creates paper dollars, base money. But all those dollars are owed back plus interest on the bonds that it bought, the Treasury bonds. And then the other form of dollars that exist are the credit dollars that are created through fractional reserve lending. When you go and you buy a house or a car, you sign a loan document. When your pen hits that paper, those dollars are created and get credited to your account. They're just a book entry for the bank. But then you go and buy something with them, and they go into circulation, and they stay in circulation until somebody saves them up and pays down debt.
And that's a really key point, right? Because a lot of people think of expansion of money supply just in terms of base money, of, okay, the Fed's expanded its balance sheet, it's tripled it, base money is increased, and this is the money supply. But you're saying all that credit expands the money supply too.
That's where the vast majority of our currency supply comes from. I don't call it a money supply.
Okay.
Money has to be a store of value over long periods of time.
You probably call it a currency.
It's a currency supply.
Currency supply.
Only gold and silver are money. Everything else is currency. It's our currency system, a fiat-based currency system, is designed to continually lose value because you have to expand the currency supply to be able to pay the interest that is due on the currency supply.
You know, Ben Bernanke doesn't say that gold is money. Is he part of that conventional ignorance?
Yes, he is part of the conventional ignorance. But the base money portion, the portion that the Federal Reserve has direct influence over, is only 6% of our currency supply. It's $3 trillion. The number of dollars that exist is a reflection of total credit, and that stands at 53 trillion. So only 3 trillion out of 53 trillion is the portion the government created. Everything else you and I create, the public creates, when we go out and we borrow to buy a car or a house, or we spend money on spend currency on a credit card. That currency is created by us when we sign that document. And
you argue if we didn't have this fiat debt-based system, we probably would have better growth longer term. But it sounds like to unwind that might be really painful. Is there a realistic way to ever do it? It's going to be the biggest calamity in financial history, I believe. Is it coming?
It's absolutely coming. You know, one of the things when I was writing my book, I discovered that every 30 to 40 years the world has a new monetary system, and nobody really has paid attention to this. A man-made system can't possibly last. Pressures build up here and there, there's misallocations of capital, and then the whole thing eventually implodes. We had the classical gold standard before World War I, the gold exchange standard between the wars, the Bretton Woods system from 1944 to 1971, and now we've had the dollar standard from 71 until today. It's 40 years old. It's the longest lived of these currency systems. There are tremendous imbalances that have been building up. The $15 trillion debt, all of our exportation of dollars around the planet. It's eventually doomed to suffer some sort of collapse or transition. And I believe this is going to happen in this decade. But since the dollar is the majority of the world's currency, if the dollar has a problem, every country on the planet has a problem, because more than half of all the dollars that exist outside the United States.
More than half, which is why all of our international viewers should be paying very close attention, because this is not just a U.S. debate. The U.S. dollar is the global reserve currency. We're going to talk about where it's going. We're going to talk about gold and silver because Mike Maloney, it's his thing. He's founder of goldsilver.com, and we will be right back with him after a short break. Welcome back. So we heard about where this is all headed, and it's not good. Let's talk about where we are in the wealth cycle. That's something that Mike Maloney refers to. What does that even mean? We're going to find out. But first, do these commercials help illustrate anything? Look a few years ago. It was all about selling gold for cash.
Here's money with gold at an all-time high. Now's the time to send your unwanted gold for cash, like these gold cufflinks.
I can get cash for this gold medallion of me wearing a gold medallion.
This gold.
Now when you look at the TV, it's all about trading cash for gold.
Whether you are diversifying your portfolio, investing for profit, or completing a coin collection, you can turn to a trusted leader.
And that's why.
Let's figure out what this all means, though, because founder of goldsilver.com and author Mike Maloney is going to break it all down for us. Now, before the break, we were talking about you believe that this monetary system is headed for a collapse. I hope I'm not putting your words in your mouth. Is that what you think?
Well, throughout history, all fiat-based currency systems collapse. And today, August 15th of 1971, we began a grand experiment. Before that date, all currencies on the planet were pegged to the U.S. dollar, and the U.S. dollar was pegged to gold. So all currencies were pegged to gold through the U.S. dollar. Nixon severed that, and before that, fiat currencies were a 100% failure rate. There is no example in all of history, and it's been tried thousands of times. It doesn't work. And then on August 15th, we decided to try it globally.
So we can only imagine where this is headed if history repeats itself. So let's talk about gold, because you're not a gold bug. At least you've said you're not a gold bug, but you think it's in a wealth cycle right now. Can you tell us what that means?
Well, a wealth cycle is basically, there are so many different asset classes, just a few. You know, you've got commodities and precious metals, you've got real estate, you've got paper assets like stocks. And investors run from one to the other, and they push one into a bubble. Well, it should be drawing currency away from the ones that are out of favor. It doesn't, because we keep on increasing the currency supply. We keep on diluting the currency supply. But what's happening is, if you have, in the last decade, real estate went up, stocks went up, and commodities and precious metals went up. That's not really possible that everything went up. What's happening is everything is going up in price, because the currency is losing purchasing power, but at the same time, there are certain things that are going down in value. If you have two things that are rising, and you're invested in this one, and it's rising slower than the other one, when you go to sell, you can't buy as much of this one. If you're invested in this one, when you go to sell, you can buy a whole lot more of that one.
Okay.
That means that this one is gaining in value and price. This one is gaining in price, but it's falling in value. And what you see, if you take things like the Dow Jones Industrial Average or a single-family median price home, and you divide those things by other things instead of currency, how much is your home worth as far as barrels of oil over a century? How much is the Dow worth measured in ounces of gold? You'll see that it goes overvalued, undervalued, overvalued, undervalued in this pattern, and it tends to be about 20-year swings.
Okay.
And so by being invested in one sector for while it's rising, and then selling and identifying the most undervalued asset class that you can and moving into that one, you're basically taking that next wave and sort of pasting it up out of this valuation channel that everything is trapped in. We get better, man gets better at producing things. We make efficiency gains relatively the same for all the different sectors throughout time. And when you measure one thing against another thing, you will find that, that everything is sort of trapped in this valuation channel. This is a true road to wealth if you can understand that your home goes from overvalued to undervalued to overvalued to undervalued again, regardless of whether you think it, I mean, it doesn't go up. Nothing goes up. That is just the illusion that is created by the devaluation of the dollar.
Okay. So we're almost out of time because we only have a minute left, but where is gold and silver? Because we don't often hear about silver as much in that wealth cycle.
Well, right, they've been in their cycle now for the last 11 years or 10 years, and this should continue for another probably. It depends on whether we have a currency crisis or not, and I do believe we're going to have at least a crisis of confidence, if not a full-blown hyperinflation eventually. I think we're going into a deflationary dip first, and then potentially a hyperinflation. Gold and silver should continue their accounting of the currency supply. We expand the currency supply, gold and silver lays in wait, and then it does this accounting. People realize there's something wrong with the currency. They rush back toward real money, gold and silver, and they bid the value of the gold and silver up until it equals the value of the circulating medium. It did this in 1934. It did it in 1980. It's doing it again, but gold and silver have to hit highs north of $5,000 an ounce, probably $15,000 to $20,000 an ounce, for the gold of the Treasury to equal the circulating medium today.
Which is a very long way to climb.
Yes.
I certainly appreciate you being on the show. It's interesting, too. You think we're headed to deflation, but then going to hit hyperinflation.
Possibly hyperinflation, yeah. But I think a deflation is, you know, only 6% of the currency supply is under the direct control of the Fed. The other 94%, they only have influence over, and it requires our confidence, our feeling good, to go deeper into debt every year, borrow and spend, to keep the game going. Okay. And if we don't borrow and spend, then the whole thing starts going into a deflationary collapse. Okay, and that's where you think we're headed, it sounds like. Thank you so. Yes, but gold and silver will still do the accounting, and it's better to be way too early than 1 second too late. Aha. There you have it. Good final words. We'll end on that, Mike Maloney. Thank you so much for being on the show. He's founder of goldsilver.com and author, Mike Maloney.